Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
Hey guys, we're back today. Sasha, how you feeling?
Oh, I'm tired today, but feeling good otherwise. How are you doing?
I'm all right. I'm tired too, but today we have to talk to our beautiful viewers about property title. Dun, dun, dun.
I was just about to do it.
I knew it. Okay, I should wait next time. Guys, here's the deal. We'll jump right into it. Property title. What is property title? I'll throw out my definition of property title. Basically, it's the system. It's through the land registry. And what it is, it offers a legal way that a person can get onto a title of their home. And we have in our beautiful world that we live in, Canada has one of the best and most accurate land registries in any country, actually. It's ironclad. It's a computer system that not many have access to. But there is data that you can pull from it. Sasha, what's your opinion on land title or property title?
Land title, I mean, in my most experience, it's usually removing somebody from a title, somebody that maybe went on to help them qualify. And then just, at some point, everything for that borrower was fine. And then they wanted to remove, be it their parent or his family member that went on to help them out. So that's most of my experience. However, I did come across one where somebody wanted to purchase a house. And then after it was closed, if they wanted to add their spouse onto the title, and then some research I did found out that they can actually do that right through the title transfer office.
Yeah, and actually just instead of going through a broker and rechanging it.
Yeah.
Now, depending if the lender has a mortgage on that property title, I'm assuming we have to inform the lender.
That's a good question.
Yeah, we would. We would.
I haven't had that situation yet.
The lender supersedes, guys. So at the end of the day, if you are going to add someone on there and you have no mortgage, far be it, I think 45 or the statistic is 45% of Canadians don't have a mortgage. Congratulations to all you 45%.
Hey-o.
But for the other difference in the percentage, and I'm not going to do the math, they actually have mortgages. So when you change title to a property, you have to inform the lender. Now, most times in my career, when we change title to a property, it involves a refinance. That's where you're actually altering the title. And what you're actually altering is you're actually not altering the title. You're altering the mortgage charge, or what they call in French, the hypothèque. Okay. Basically, that was my best French accent.
Yeah.
So basically, we're going to go through today and we're going to talk a lot about property title, what you can do. What happens when someone goes on title that you're partner with on a rental? What happens when your dad or mom or your great aunt Susan, who's awesome and came through for you and decided to co-sign for you to get a larger mortgage balance to buy and purchase that home? I'm not being specific, but Aunt Susan, we love you. What happens and how do they get on title and how do they actually move through the mortgage process? How do they remove themselves from title? So, Sasha, what happens when someone co-signs on a mortgage?
Sure. So when somebody's co-signing on a mortgage, they're helping somebody qualify for that. And they're just coming on with their income, to strengthen the file. But I'm sure that person's not going to want to be on that mortgage forever. So in my experience, I had a client that it came due for renewal, and at renewal, he wanted to remove the uncle. And so it was just, basically renewing and then getting the uncle off. I believe there were some land transfer taxes that had to be paid there.
We'll talk about that too.
Yep.
I agree. Yep.
So that, that's pretty, I've only done one so far. So that's my most experience with that.
No problem. No problem. I like it. That's a good answer. So here's the thing. There's two different actual ways we could do this. We could co-sign on this mortgage. And co-signing would mean you're on the mortgage documents and you're on the title to that property. That usually involves land transfer taxes like Sasha's talking about, but let's talk about this little beautiful word. And I've known about it for years, and only recently did CRA come out saying, we now want these things this year. And it was called the Bearer Trust Agreement. What is a Bearer Trust Agreement? A Bearer Trust is basically set up by the lawyer. I'm going to give you an example here. Sasha is a beautiful friend of mine, and all he's doing is coming on saying, Duncan, I can't believe your mom and dad didn't want to co-sign for you. I believe in you. I'll co-sign. And I say, thank you so much, Sasha. And what Sasha would do is he would sign a bare trust with me saying that he has no interest in the property and he's merely holding that actual title portion. He's holding that ownership percentage for 5 years, for 3 years. And what happens is he gets put on title and we produce this to the CRA because the CRA will ask and they'll say, okay, why isn't Sasha paying land transfer taxes on this? Why isn't he involved with the sale? Or when you move him off title, CRA wants their cash for capital gains. This bare trust agreement, what it does is it nulls out that whole situation. Because Sasha, my buddy here, he just believed in me and he wanted me to get the mortgage. He didn't want to have any interest in that house. He had no gains from it whatsoever. Now, the only downfall is that Sasha now has a mortgage showing up on his credit bureau. So we have to talk. Like if Sasha, for instance, came on title with me, he's a co-signer. But what about this word? What about this word guarantor? You ever done a guarantor?
Yeah, actually, before we get there, I do have one question about that.
Go.
So if your wonderfully handsome friend named Sasha goes on to help you out, say that handsome dude is a first-time home buyer.
He's pretty handsome.
And there's
not as good looking as me, but
right. But there's this bare trust agreement and because he's got no actual interest in the property, is he paying the land transfer taxes? First question. Second question, if he's a first-time home buyer, does that make his ability to have the land transfer tax rebate down the road?
So that is a very good question. Land transfer taxes in regards to the government of you going on. So this is where another little key concept. If Sasha's signing a bare trust agreement, he might want to go on what's called tenants in common. So when Sasha comes to help me co-sign, the lawyer would issue Sasha 1% of my property title. And it would, however, take away your first-time home buyer incentive. But he has 1%. He has less land transfer taxes associated to him. And I have 99% to pay to the government for my land transfer taxes. So it would forego. Sasha would be pretty pissed down the road. This handsome guy, this handsome friend of mine, he'd be like, oh my God, you took away my incentive. Yeah. At that time, you can talk to your friend and we could be like, maybe work out a deal or say, hey, listen, I'll pay you that back or I can give you the rebate. But up front, anybody going on title to a property is going to lose the first-time home buyer incentive. And what that incentive is a rebate of $4,000 back into their pockets from the government. And it's done at the lawyers. It's not like you have to pay it and then get it back. The lawyer just basically makes an adjustment on the closing costs. The weird thing is, though, it should be around 10 grand these days for the house costs, and it never came up. Like back in the day, it used to be $2,000. Now it's $4,000. I mean, the government needs to really catch up here and make it probably 8 or 10,000.
Yeah.
And that's another one. The metropolis of the general Toronto area, they have another incentive, and I believe that's municipality driven. I don't think it's government driven. That would be cool for a lot of municipalities to actually start basically using that and saying, hey, we'll give you an incentive to lower this land transfer tax. Or here we go. Why don't we just get rid of it? Because there's so much other costs to getting a house.
Yeah.
Why does the government need to come in and dip in and say, hey, you're costing yourselves, give us that money? So we'll move on from there because if we talk about what the government should change, we'll be here for another 4 hours.
Yes.
If not longer.
So sliding back to guarantor.
Yeah. So
yeah, my general understanding of a guarantor is somebody who guarantees like they're backing up the mortgage. However, their income cannot be accounted for to qualify.
Ooh. So that is very interesting you're saying that. So I think the general concept has changed. So I'm using a guarantor currently on a deal right now where it's lowered the ratios down and he's only going on the paperwork. He is not going on title. They've used his income and ratios to lower it to give him the better rate. So that's a cool thing to know. And I think that's just a change because, oh my God, Sash, like for 3-4 years, there was no guarantoring. Guarantoring went to the back end.
Yeah.
Then B lending came around and we'll go into the different types of mortgages you can get. But on a AAA client, meaning prime, okay, this is the word, prime, AAA, best rate, discounted rate. These are banks. These are driven by FirstNat, MCAP. There's a lot of lenders that do it. Guarantoring became obsolete. They basically said, you know what? No, we don't care if he's on the paperwork. We want him on title. So he's got a liability there. So just remember this, if you're going on title, you have liability to the property now. You actually have to deal with the property. If you're just a guarantor, you're merely on the paperwork. And what can happen is you can get the mail out to your house, and you'd get this mail, and it would say, and let's say my good looking friend Sasha here is guarantor for me. He would get a notice as well as me for my house and my payments, property tax increases from the lender. All lender correspondence could go to Sasha and myself because he's a guarantor.
So a guarantor in general is not really assuming any of the interest in the property. It's just if the actual owner of the property defaults,
Yeah.
then the guarantor then can be sued in the process.
Correct.
Okay, interesting.
And then I had the furthermore on that, like I had another guy, he came in and he said, well, if I'm guarantoring on this property and, they don't pay the property mortgage payment, will they garnish my wages? It's a huge question right now, garnishing wages. And we can go into that a lot more later as well. But garnishing would only come out when you sign a letter at the lawyers. They could, in fact, garnish your wages, but more than likely, lenders will go straight to the title to protect themselves and try and sell the property off and go power of sale in this beautiful province of Ontario. A lot of them don't go to foreclosure. So let's wing it back around, and we'll go into the processes of changing title. Let's look at that. So, Sash, what's your process? What would be someone came in and said, hey, I want to change the title of my property? I mean, I don't ever have a client come in going, I would like to change the title to my property.
Yeah, I've never had that either. Like I said, I've had somebody who wanted to remove somebody from the title, but like for changing title, I mean, is that up to us, or would we just direct them to the land transfer or the land title office?
So if there's no mortgage, again, I'll go back to that. If there's no mortgage, but if there is a mortgage, which naturally most people come to us as brokers and say, hey, I have a mortgage, I would like to remove someone from my property. So maybe it's your grandma. So you've gone ahead and grandma signed the bearer trust agreement. Grandma is now on property, and we're 4 years into this deal and about a year coming due. We're coming due on renewal, which you guys know the word, and I talked about this last week. The swear word of the year is renewal. So grandma wants to come off title. In order to change the title of this property, in order to alter it, you have to go to a lawyer, and you'd have to go through the lender. And the lender has to redo all the paperwork, meaning you're getting a brand new mortgage in your name to remove grandma off. That's really one thing you can do. There is another solution to this too, which is in the back end, and it's called a covenant change. A covenant change is where you go to your original lender and you say, hey, here's my paperwork, here's my pay stubs, here's my blood samples, here's my urine sample from last week. Please remove grandma. I look like I can afford this myself. And then what grandma does, she gets notified, and they'll use the lender's internal lawyer to remove her from title. And that's called a covenant change, guys. And I really want you to understand and remember this word covenant change. It is less costly. You're looking at like $400 inside the lender, and you're not involving an external lawyer. And it saves you thousands of dollars. Sometimes, depending if you're doing this before renewal, you're going to not incur a penalty because the mortgage still rides out, and all they do is go bloop and remove grandma off title. And I'm using grandma as a general term. I mean, you could do grandpa, mother, father, anybody that's on title that you want to remove. Now, let's move into this rental situation. I find a lot of people these days have bought rentals, and what they do is they go get Tom. And Tom's their buddy they just met 3 weeks ago. And Tom and them, they had a beer together, and now they're deciding we should buy and flip rentals, or we should buy and create a rental empire. And over this 1 beer to 2 beer discussion, they decided to put an offer in a house. Because I'll be honest with you, the realtor overheard this conversation, and she called him right away, or he called him right away saying, hey, I heard you were talking. Let's go find some houses.
Yeah.
So lo and behold, Tom and his buddy are now buying a house together, and they're going 50-50 because they didn't discuss who should go on title. They didn't discuss who's going to live there. They're going to just buy this property. That is going to incur capital gains in the future. Right now, the government is changing it from 50%, I believe, to 66% on these situations. But let's say you bought it and they wanted to rent it out. Here comes the big kicker. If Tom goes 1% tenants in common, he's got less income to claim. But if you guys Tom and his friend went 50-50, they're both claiming half that amount of income on the property as well as half the expenses. Now, come a time where Tom says, you know what? You're my friend, but I kind of want you off this. And the friend's like, you know what? I was thinking the same thing. And this is all but done over a beer again, 3 years later. The friend's going to say, you know what? I do want to come off title, that Tom can actually go to the lender and ask for a covenant change to remove his friend as well without touching the mortgage, guys. So please understand, we're here to save you thousands of dollars. Like, really, this podcast is to tell you not always is it the best just to go to your bank or go to a broker and say, hey, I need a refi done, because the broker's going to jump in and do it. Me, myself, I kind of look through the whole scenario and I try and find the most easiest, I would say less headache situation that we can do. What is the least amount of hassle? And yeah, it may not put dollars in my pockets, but I don't know. I got enough people that need the actual refinance. I have enough people that need to actually perform a title change without a covenant change. All right. So that's one of the biggest things. Changing the property is either involving a lawyer or not involving a lawyer and doing the covenant change to the lender, in which case you can involve a broker and they can deal with that as well and help you.
So we've covered adding and removing owners, changing the type of ownership, and transferring ownership. Here's one that I like to see here: correcting errors and discrepancies on the title.
Whew,
So again, like, is that something that we as the brokers would handle, or is that something we would just refer back to them to the land title registry office?
So we have to go through errors, and we'd have to honestly qualify this error. Is it because there's a spelling error on the name of the person and the pen? So let's talk about what a pen is. A pen is a search item. Imagine a credit bureau on your property history. That is what a pen search is. Lawyers use pen searches. And what happens is a lot of times they'll pull this pen, and I'm getting a refinance done for my good looking friend Sasha. He's getting a refinance done. He's at the lawyer's, and the lawyer calls me up going, Duncan, this mortgage is with First Nat, but I notice we're paying out Windsor Family Credit Union, but there's this TD mortgage sitting on the pen. Meaning that some lazy person at TD who's supposed to be in the back office is supposed to press a button, enter to, discharge the mortgage, but it hasn't been discharged yet. That would be a lawyer situation where a lawyer would have to go and correct it and write to TD back office and say, hey, TD, I need you to remove this. It's done in error. There is other discrepancies that you go through a lawyer in order to correct your pen. The lawyer, and I'm telling you, you guys can go direct to the land registry if you want to. But I would say have at it, because you'll be going through headaches. So I would involve a lawyer whenever there's errors or discrepancies on your title. A lot of these errors and discrepancies are coming from clerical end user, meaning someone hasn't discharged. There's either a notice on your title property or your pen search that's improper. I'll give you an example. I had at one time had a guy come in. He wanted to refinance his property. We get everything done, man. We worked our butts off. We got it done really quick. Go to the lawyer. There's a warning on his pen. And that warning says the guy's married. And he never told us that. He told us that he was single. So these lawyers are around to stop this sort of thing from happening. We call the client. We say, listen, you never told us you were married. And I'm not going to lie, he actually was like, oh, yeah, that's right. Yeah, I forgot. Like,
Oh my
who
gosh.
forgets that they're married?
I wonder if he slept on the couch that
night. only our beautiful borrowers would do that. So he sat there saying, oh my God, I forgot. I forgot I was married. So we were like, okay, well, we can't do anything because somewhere, and I'll tell you this is what's cool. The wife knew he was probably trying to do something with that title, and she's gone and involved the lawyer, and that lawyer has put a warning on that pen. Imagine like a credit bureau, and it has this system in there. If someone comes in and uses my SIN number for their application and it's all different information, it'll actually signal a warning on the bureau. And you've seen those, like, there's a warning on this bureau. Please call this number. The PIN is almost the same thing. The PIN is like your credit bureau of your property, and it protects the client at the end of the day. And to fix those guys, please talk to your lawyer. If you don't have a lawyer, we can actually direct you to a good, like at least 12 good lawyers in the city of Windsor, because there's a lot of good lawyers in this city. Okay.
So speaking about discrepancies in that, right? So that leads me into title insurance. Like, a lot of questions I get is like, what is the title insurance and is it mandatory?
Okay. So back in the day, we used to get like this, this is before my time actually. So you would go get a surveyor, and it would cost a lot of money. And a lot of surveys were already pre-done, and they would sit at the city head office. So what you would do before title insurance came along, someone would go out and survey the title of this property, meaning survey the land, survey the unit to make sure that they're actually in lane. Like the property is actually in lane. There's no fences over top, right? So someone would go out and make sure and go, okay, well, here's your lane of your property. No, the whole lining of the properties brings me back even further to high school with Louis Riel, when Ontario and like the Western government was trying to actually, break up the land and do surveys on it. And then he had this whole gang that just fought against him. Louis Riel, we love you, buddy. But anyways, to stop the segmenting of the land. But no, you have these segments of land. That's your title. So this surveyor would go out, and a lot more cost and a lot more time was involved with actually getting this thing done. Then, lo and behold, someone comes up with a solution. Why doesn't everybody just pay this title insurance at the lawyers? And what it does, it goes into one big bucket. And it's a very, very rich scheme. I wouldn't call it a scheme. It's just a system that we're in that covers you off, makes things quicker, more convenient, right? Now, title insurance is pretty cost effective. And what it does is it protects you from liens on the property. It protects you from, I don't know the words right, but malfeasance, anything like that, like any kind of defects on the property. So I'll give you one story and I'll make it quick. A guy went and bought his property, and what he found out was that he had a fence. His neighbor's fence was abutting, and I love the word abutting. And what it means is it was on his property line. He fought title insurance. They brought out somebody at that time and said, okay, yeah, you know what? This guy's fence, instead of wrecking the whole fence, they paid the guy out $50,000 for the difference in the land. And that's all they would do. You're satisfied. You're getting money to just, let it happen.
Yeah.
All right. There's other things like eaves troughs that could possibly go over roof overhangs.
Actually heard of one recently where half of one guy's garage was actually on the neighbor's land.
Yep.
And it was a financial or monetary dispute. Yeah.
Right. And then you have to wonder, the legal way of doing that was chop that garage in half and demolish it and make this guy redo everything, or pay out the claim on title insurance. Title insurance does not honestly cover, let's say, water damage, defects. There's a lot of Mother Nature situations in there that do
regular
not.
House insurance, right?
Yeah, not even that. I don't even think house insurance covers it anymore either.
Not after late.
Yeah.
What's been going on here?
And I would say our insurance for houses in Canada are very, very almost general.
Actually, my buddy is an insurance agent with the cooperators. He was just talking about this on the weekend.
Yeah.
Windsor has the highest insurance rates in all of Canada.
Isn't that terrible?
Due to flooding.
Yeah.
Crazy, eh?
And then they don't come up with a flood insurance. So it's I don't get it.
You can get comet insurance in the States.
Yeah.
Comet's going to hit your house. Your
comet insurance.
Right?
Or asteroid insurance. I wonder what's more expensive, asteroid or comet insurance, man.
I guess depending on the size.
Yeah. In essence, guys, if you ever want to change title to a property, please go in and see Sasha. Come in and see myself. We'll talk to y'all about it. Always get prepared. Bring a pen and paper because we're going to give you a lot of knowledge and we'll figure things out for you. But today, no headline news. There's nothing crazy going out there. They may drop the rate. They might not. It's like a gamble. It's like black or red. There is no green in this actual wheel.
Yeah.
So you have to understand, the rates are dropping, inflation's dropped, and guess what? Canada is now building enough homes for everybody to actually be housed. I'm just joking. They're not. They're way behind still. That has not changed in 7 days, guys. They are still behind, and they'll be even more behind next week. Let's start building regular homes instead of luxury homes. That's just mine.
Yes.
Thank you so much, guys. Thank you.
All right.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.